Good afternoon, Matrix, and welcome to a session where I'm going to teach you magic. Today we're going to look at the cash flow statement, and to me it's the most magic statement of all the statements that you get: balance sheet, income statement. It's also known that this is a difficult statement, but it doesn't have to be. It really does help the owner of a business or the shareholders of a company to understand how cash traveled through the company. So this session, if I look at my PowerPoint, we're going to look at cash flow statements. We're going to look at the purpose and why we prepare a cash flow statement, the types of activities that are reflected in a cash flow statement, and then most importantly, where to find the information. I find that learners really battle to find information. They know what to do, but they're not always sure where to find the information. And of course, with every activity, there are different ways of finding the information from the income statement, balance sheet, or information provided to you. But again, as I say, this is magic. So first of all, let's talk about this cash flow. If you look at the following drawing on the slide, it represents a tank. Let's say the tank is the cash in the business, and it's got an inlet and an outlet. So what would make money flowing into the business? Sources of cash, let's call it that. Number one, it's operations. That's the normal business that is happening in the company. For example, they manufacture clothing, or they sell pies, or it's maybe a retailer. So you can imagine all sorts of operations. That's the core business that the company keeps itself busy with. But also, money can flow into the business with loans that the company acquire, or when the company disposes of assets, when the company issue more share capital, and when maybe a fixed deposit expires. So grade 12, at this point, it's important to remember that not all money that flows into a company is regarded as income. Sometimes it really is just because debtors have paid off their debt, or because you acquired a loan. A loan is actually, in a sense, negative because you now owe money to somebody, but for your cash flow, it's fantastic. It's money coming into your business. Then, of course, the money flows out of the business as well. So let's look at ways that the money will flow out of the business. Well, first of all, it can flow out by your normal operations. That is paying your advertisements, paying for your wages and salaries, buying trading stock, paying insurance. So your normal operations will require money to flow out of the business. Maybe your loans need to be repaid. Maybe you purchase new tangible assets. Maybe you have to pay dividends or taxes. Or maybe there is a repurchase of shares. Or maybe you've made an investment in a fixed deposit. So that has explained to us that sometimes money also flows out of the business. Okay, now if you take your book, your Telematics accounting workbook, and your instruction book, I want you to open that on page 7 in the instruction book, and then in your workbook keep that open as well, because again we're going to be very interactive and we're going to work together. And you will see on page 8 there is a activity 3. It's branded activity 3, and it says reconciliation between net profit. And then if you turn the page, you will see the actual cash flow statement is on page 9. Okay, and that's where we want to start. And you can keep that open with you so that you can work with me and also have your information handy. Now, in this activity, if you look at the information that is provided, I have tried to draw up an income statement, which in the end shows that over here, the net profit after tax is 1788. The income tax is 692, and the profit before tax is 2480. And I've really used the information that was provided to you on the slide on the in the information booklet over there, they've told me what the net profit is. They've also said that the income tax for the year is that. So I've kind of reconstructed an income statement just to give you an idea of what the income statement of that business would look like. So if I go back to that income statement, I will see that the net profit after tax is 1.788 million. Okay, but now, if I look at the balance sheet of Derby Limited, this is the company that we're working with, I notice that the cash and cash equivalents is 489,600. And grade 12s, this brings me to the purpose of a cash flow statement. Maybe the shareholders will want to know, well, if we made a profit, why is it of almost 1.7 million? Why is it that we only have 489,000 in the bank? So the cash flow statement, and my auditor friends all tell me this, is actually the most effective tool to make sure that your cash flow in your business is run properly, because net profit in an income statement can look very promising, but it could be that your debtors owe you a lot of money, or that maybe your cash flow situation is in dire straits and that you really need to look at where the cash is going in the business. Again, if I use this information, let's draw the tank again. It says that at the beginning of the year, Derby Limited had 88,800 in the bank, and the money rose to 489,600. Why do I say that? Why is it that the money went up to 489,000? What happened in the business for cash to start at 88,800 and then go up to 489,600? According to the information as it is provided here in the cash and cash equivalent notes. So I'm going to try and explain that to you, looking at the different ways a cash flow statement is laid out. And if you turn to page 9, turn to page 9 of your pink book and have a look at the cash flow statement over there. And you will see, I'm going to show you an enlarged version of that. The cash flow statement on your answer book has got 3 main sections. The one, cash effects of operating activities, cash effects of investing activities, and cash effects of financing activities. Those are the 3 main sections of a cash flow statement. And these 3 main sections will try to explain to you how the cash traveled through the company in order to get you to the bottom of 489,600. So if we just look at that again, a cash flow statement, number 1, first part looks at the cash effects of the operating activities, which shows the cash from normal operations. If it is a business selling pies, then what cash came from selling pies? If it is a clothing manufacturer, what money came from manufacturing clothing? That is excluding any fixed assets that we purchased, any loans that we repaid. We will only look at fixed assets purchased, etc. in the next line, or in the next section, the cash effects of investing activities. And then the last section of the cash flow statement looks at the cash flow from financing activities, shares issued or bought back, and loans made and repaid. So a hint, remember to know the 3 different sections: normal operations, your investment activities, and your financing activities. And we're going to spend the rest of this afternoon looking or analyzing the cash flow of Derby Limited. In the end, the cash flow statement will end with the net change in cash and cash equivalents. And this is where the magic comes in, because I'm going to show you that if we add up these 3 lines, we are going to get to the same answer as that 88,000 at the beginning and the 489,000 in the end, which gave me a net effect of 400,800. Okay, so let's start with the information in the income statement again. Remember now, the net profit at the bottom here says 1788160. And I want to know why 1788160 does not reflect the money in the bank. And if I go and look at my statement that says what the cash in the or cash equivalents in the bank is, I'm going to see from my information, I just want to go to the slide that shows the information, or the slide that shows the balance sheet again. I think it's one back, two back. Just a moment, let me just open that slide again. Slide number 17 will give me. There we go. Cash and cash equivalents. So at the end of the financial year, I had 88,800. And grade 12, we're going to actually start the statement right from the bottom, because this is what we're trying to explain in the cash flow statement. So I want you to start here right at the bottom and say the cash and cash equivalents at the end of the year is 88,800. And then that the cash and cash equivalents at the beginning of the year, if you look at the financial statements, you'll see the beginning of the year, the cash and cash equivalents is equal to 489,600. Now, if at the end of the year, my cash and cash equivalents was, at the beginning of the year, it was 88,800. At the end of the year, it's 489,600. Then it means that there was a net change in cash and cash equivalents of 400,800 rand. And that will show you the net change in the end. It looks like I have switch this. You can just draw a line here and just switch these two. Apologies for that mistake. This one must be 88,800, and this one, of course, at the end of the year, it is 489,600. So just cross that out. Okay, and now, grade 12, I want to explain what happened. So I'm going to start with the net profit from the income statement before tax. Let's just go to that net profit from the income statement again. If I open up slide 3 again, remember now, from the information that they provide me, they tell me that the net profit before tax is 2480160. Where did I get that? From the info, they say the net profit before tax is 2480160. So now we're going to, first of all, go to the note. We want to look at the cash effects of operating activities. And we want to see in this business, how was it that they managed to make their business run and to sustain their cash flow just from their normal activities. So the first question I'm asking is, what was the cash generated from their operations? And for this specific entry, or for this specific line item, I have a note. That's note number 1. This is my note section. So I go to the previous page in your workbook, and you see this one says, let's reconcile the net profit from making pies and the cash that we generated from making pies. Okay, I'm going to say that again. This note is going to try and reconcile net profit and cash generated from the thing that my business does best. And to do this, I'm going to start with the net profit before taxation as it was provided to you in the information, 2480160. And now you must remember, grade 12, that this figure here is a figure that was provided to you after you have deducted taxes, interest, and after you have deducted certain cash flow, non-cash flow items such as depreciation. Have a look at this slide again. I have net profit before tax of 2.480, but interest was deducted. So before I deducted the interest, it would have been 265,240, and I really want to know what that figure looked like before I've deducted the interest and before I've deducted the depreciation, for two different reasons. The depreciation is because it's a non-cash flow item. In your syllabus, this is the one non-cash flow item, which I say in my reconciliation, you know what? Don't deduct that from net profit because I didn't write out a check. I didn't make a payment for depreciation. So that is why depreciation of 348,000 is added back to the net profit before tax. And then also the interest, and I'll show you just now how to calculate that interest. The interest is added back to that calculation because I want to know what my operating profit looked like before I deducted the depreciation because it's a non-cash flow item, and the interest I'm adding back because interest has its own line item in the face of the cash flow statement. Okay. Now, grade 12, to get to the interest amount is actually a complete different chapter. So I'm going to go through that quite quickly. I suggest you write this down, and maybe if it puzzles you, go look at it again. Maybe ask your teacher or a friend to just explain it to you again, because I can't stand with that for too long. But let's just look at the information about the interest, and then we see what we can make of it. Okay, I'm on the information page again. That's page 15, and it says that Derby Limited paid 27,360 per month to Club Bank, which included interest and loan repayments. Interest is capitalized to the loan. So they are saying that Derby Limited paid 27,360 Rand times 12. So they made payments to the value of 328,320. If I know, or knowing that, if I look at my balance sheet, I will see that loans at the beginning of the year was 960,000. Okay. I know that they've made payments of 328,320. Those are the payments. And remember, if this confuses you, write it down and then think about it again later on. And then they also tell me that interest was capitalized, but I don't know what the interest was that was capitalized. Let's just write there, interest capitalized. What I do know is that the closing balance of the loan at the end of the year, according to the balance sheet, look in your balance sheet and you will see that the closing balance, let's write there, closing balance is 804,000. So if you go work that out, 960,000 minus 328,320 plus what? Gives me 804,000, and if you simplify that, you will notice that they have capitalized interest to the value of 172,320. And I got this by simplifying this. I've made a linear equation, and this was my x, and I said 960,000 minus 328,320 minus x is equal to 804,000, and that gives me the part of interest capitalized during the year, and that interest is the figure that I'm going to put into the note over here, interest 172,320. Remember, in the reconciliation, I added back so that in the face of the cash flow statement, and let's just do that right now, 172,320. Interest paid, 172,320. I minus this. Now, grade 12, whenever we make an entry in the cash flow statement, I want you to ask yourself the question, what happened in bank? Did money flow in or did money flow out? And that is always the question. So now, in the face of the cash flow statement, when we show the amount for interest paid, we know that an outflow of 172,320 happened. Okay, at this point I want to see if everybody is with me. Yes, I thank you for that person. I can't see your name, who said that I have made a mistake at the cash at the end of the year. Thank you so much. We did correct that. That was a mistake on my side, and this was these two figures at the bottom which we corrected. So thank you for that. Grade 12, I also realized that we're going very fast. The cash flow statement is a very complicated, no, complicated is not the word. It's a statement that explains the cash, so there's much that we want to go through in an hour, and then in the end I will get back and maybe go slower through some of the aspects. Okay, so we are back in the reconciliation of net profit before tax and cash generated from operations. And we had to stop quickly because I needed to explain to you this interest bit. And now that we've done that, we have come to a point where we can see from our information that the net profit before tax was 2480160. The depreciation we add back because it's a non-cash flow item. Remember, make a note there for yourself, non-cash flow. That's why we add it back. And the interest, because that is going to the face of the cash flow statement. And then we get to the operating profit before changes in working capital. But now you must remember that this is still not cash. If the business sells pies, this still does not represent the cash from the business. We now need to accommodate the changes in working capital. And we look at three items in the working capital to, in the end, get to the cash generated from operations. The first thing we're going to look at is the changes in inventory. And if you look at the information on the balance sheet, you will see that if you look at this year, inventory at the beginning of the year was 1392000. Grade 12, remember, every time when I say at the beginning of the year, I mean the last day of December 2012, the first day of January 2013. Our financial year runs from the 1st of January till the 31st of December. So over here, on the last day of December last year, first day of this year, we had 1.3 million rands worth of trading stock or inventories. That includes, of course, your consumables on hand. Last day of this year, we have 1.094 million. Now, if you think about it, if a business has 1.3 million rands worth of stock sitting on the shelves, and at the end of the year, they have more or less 300,000 less, it means they have 300,000 more available in cash in their working capital. So if you write that down, you'll see change in inventory. At the beginning of the year, it was 1.392 000. At the end of the year is 1094,400. That means that 297,600, a positive figure, I don't have a bracket here, positive figure came into the business in terms of cash because the inventory decreased. Then if I look at my debtors, that's the next item on the list. Just want to go back to the information. If I look at trade and other receivables, that's where debtors are. You will see at the beginning of the year we had 312,000 in terms of debtors, income receivable 12,000. Then in terms, and I have to go and look at the note. I can't use the balance sheet because the balance sheet unfortunately is a comprehensive amount. Trade and other receivables there. I have to go and look at the details. So remember I told you I will today try and explain to you where to find the information. When you try to do the change in debtors, do not use the face of the balance sheet. Go to the note, because later on in the cash flow statement, you will see that we will do the income tax as a line item on its own. So when it will, right here in the face of the cash flow statement, income tax and dividends has their own line item. So when I try to calculate the changes in debtors, I must not include dividends and income tax amounts in those. Changes in debtors and creditors do not include any dividends or any income tax amounts. Going back to the slide, what I've just said was leave the SARS, work with debtors plus income receivable versus debtors plus income receivable. And it's important that you do the brackets over here in your reconciliation. Make the brackets and say, I have taken 312,000, I added 12,000 to that, minus the 121,200 plus 4,800. And the reason why you have to do this is at the end of the year, if you do make a little mistake, you might still get work with marks. So, because you might get your marks like that, you see. So it's important that you show your calculations in the space provided there. And in the end, if you take this is going to be 324,000 minus 126,000. You'll see that debtors changed with 198,000. So at the beginning of the year, I had about 324,000 Rand that was owed to me. At the end of the year, I have 126,000 owed to me. Debtors decreased. Less people owe the business money. Therefore, the business had a positive effect on its cash flow. The last one in this section is to look at the creditors. Trade and other payables. Again, leave the dividends, leave the SARS because you're going to work with that separately. Take the beginning of the year's figures and the end of the year's figures and compare the two. And again, make sure that you write down what your workings were. So change in creditors 778,000 plus 84,000 minus 310,800 plus 18,000. And the difference between those two, this one is 800 and the sum of this is 862,000. The sum of this is 328,000. So I had a negative outflow of 533,200. So what happened here? At the beginning of the year, there was around about 862,000 that I being the company, owed creditors. At the end of the year, I only owe them 368,000 Rand. It means I have taken the cash in the business, and I have paid my creditors. What happened to cash? Outflow of cash. Therefore, I put it in brackets in my note. And now, grade 12, I take these three and I add them up, and I say the changes in working capital, 37,600. And then in the end, I say, if the normal selling price, leave out the depreciation, leave out the interest because I'm showing it later, gives me 3 million. Then to change that into a cash effect, in other words, to reconcile it with the cash effect of working capital, the cash that was generated from the normal activities of this business is 2,962,800. That's a mouthful. And this figure you transfer to the face of the cash flow statement, 2,962,800. And we're over the worst part. That is a lot of work that you've just completed, and that was to change the cash from, or the net profit, and to give it a cash face, and to say, from my normal activities, 2.962 million came in cash. But then still, why do I only have 489,000 in the bank? The shareholders will want to know this. The shareholders will want the directors to plan according to this. So I'm now going to explain to, and we are going to use this cash flow statement to do magic and to explain to the shareholders why, if you see, this even looks even better than the cash flow statement, than the income statement. We say that there was a cash effect of 2,962,800 from your normal activities, but you only have 400,000 in the bank. Why is that? 489,000 in the bank. Well, first of all, what had to happen to that was we paid interest, and I showed you how to calculate the interest so you can put that in. The next thing that we had to pay was dividends. Now, to establish what the cash was that was spent on dividends, I need to reconstruct the dividends ledgers. Again, grade 12s, the information can be straightforward. They can say dividends were paid during the year, and that's it, and then you'll be able to write that down. Or they will provide you with financial statements, and you have to plot and figure it out. It's a bit like a puzzle. If I know this one and I know that one, then where is the other one? So there isn't just one method. I'm going to show you two possible ways of calculating the dividends. Let's start by using the actual ledger accounts. Okay. Now, have your information next to you. Work with me. Then you'll see that at the beginning of the year, 432,000 Rand is owed to Derby Limited, is owed by Derby Limited to their shareholders. That was for dividends that was due from the previous year. So that was dividends that they haven't paid at the end of last year. Now, of course, and I put a question mark there because it doesn't say exactly when, but I know that soon after the start of the new financial year, 432,000 Rand would have been paid to the shareholders for that outstanding amount there. Then they also say that an interim dividend from your information, just go read there in your information, you'll see an interim dividend of 260,000 Rand was paid. So that came out of bank. Okay. Then they declared a final dividend, and we did this last time. That final dividend, of course, is owed to the shareholders at the end of the year. I say there that it was the final dividend was declared, but it wasn't paid yet. And if I complete this, I know that the total dividends that goes to the appropriation account is 1.17 million. And I can complete the shareholders for dividends account. And at the end of the year, I know that 753,600 Rand is owed to the business. Okay, now I need to go and find out, so what was it that I actually paid? Because remember now, I'm not talking about income and expenses for a cash flow statement. I'm talking about the flow of cash. Well, there is an amount with a bank next to it, and I've got another amount there with a bank next to it, and that would have been the cash outflow in terms of dividends. So let's take that bank, and we take that bank, and we add it together, and we'll get to a cash outflow for dividends of 695,760. And that you can write in your cash flow statement. 695,760. But there is another method of getting to the 695,760. Let's say we were provided with a retained income note, and you weren't, but you would be able to construct it from the information that was provided. I'm trying to explain to you that sometimes the information is given to you in a different way, and then you also need to be able to get to the dividends amount without reconstructing the ledger account. Then you see over here, we have a dividend amount of 1017360. So this is the actual dividends for the year. But we know that 753,600 of that was not paid. And we also know that we paid an amount from the previous financial year. Okay. So let's work it out in a way, cash flow, let's just draw a table that says the dividends for the year. I'm not saying the dividends that was paid. The dividends from the statement says 1017360. That would have been a way equity is decreased in the company. Okay. Now we need to find the amount due at the beginning of the year, and we'll find that in the statements 432000. An amount due at the beginning of the year. We also need the amount due at the end of the year. Now remember, this amount has not been paid yet. This is still due to the shareholders. So if you add that together, magic, you'll also get to 695,760. So grade 12, do you see? I can either reconstruct the ledgers, find the bank amounts, add them up to get to the amount for dividends paid, or I can do a calculation that talks about the total dividends for the year, add to that last year's dividends, minus from that this year's dividends that has not been paid yet, and I will also get to 695. And I think it's a clever idea to write that next to your dividends. In other words, to say, so it's the total dividends for the year, 1017360. I've also paid 432,000, and I have not yet paid 753,600, and that gives me 695,760. Okay, then we go to the income tax paid. From the information, I am able to draw a income tax account, and I know that at the beginning of the year 168,000 was owed. That's the amount owed to SARS at the beginning of the year. That would have been paid soon after the start of the financial year, so I can put a bank through that would have been paid. Then grade 12, if I look at the other information, the additional information provided, you will see that the income tax for the year amounted to 692. And you will remember in our last lesson that we said that is a debit to the income tax account and a credit against that provision. But I don't know what my provision is yet. But I can use the rest of the information to reconstruct the account. I can see in trade and other receivables that at the end of the year, SARS owes the company 30,000. Now they can only owe the company if they've overpaid. So the company has made too much provision, therefore they have a debit balance in their SARS account at year end, which would result in a balance carried down on the credit side. And if I've got all of that information, I can determine that the first and second provisional payments that were made during the course of the year must be 722,000. So again, let's find the bank amounts. 168,000 was paid for SARS or tax due from last year, 722. And the beauty of this is you can replay this DVD and go and look at my argument to get to the 722 again. And that will give me a total of 890,000 Rand. But there's another way of looking at this. I can also say if the amount from the income statement right there, as it was provided to me, is 692,000. There we go. And the amount due at the beginning of the year, over there, provided to me, is 168,000, and I had to pay that. And SARS owes me 30,000 at the beginning of the year, at the end of the year, sorry. It means I have overpaid 30,000, so my net cash outflow is 890,000. So again, two ways of reconstructing the taxation amount. You can either use the ledgers or you can draw a table. And clever idea again to earn extra marks in the exams is to write down your workings there. So you said the tax amount was 692. You also had to pay an amount of 168,000, and you overpaid by 30,000. And grade 12, you will see in future exercises that this can go either way. Sometimes the last amount is due to you, sometimes it's due by you, and you have to look very carefully with the SARS amount there, whether it was a cash outflow or a cash inflow for you. So in the end, the cash there is 890,000. Okay, cash outflow for income tax. And that brings me to a total for section 1 of 1,204,800. Cash effects of operating activities, normal activities of the business, after we've paid interest, paid dividends, paid income tax, we're left with 1.2 million. This adds to the top. But we still don't understand why we, at the end of the year, only have 489,600 in the bank. Well, it must be because we probably had investing activities or financing activities. The first thing we're going to look at is the investing activities, and they consist of the investment or the disposal of fixed assets and then a change in financial assets. If you look at the information in the balance sheet of fixed assets, you see they have a total here at the beginning of the year of 2,532, at the end of the year of 3,552. Now remember, in your fixed asset note, in the total column, those amounts would sit there. At the top here, you would have cost price minus accumulated depreciation gives me carrying value, and at the bottom you would have cost price minus accumulated depreciation gives me carrying value. So those two lines are items provided to you, and you can fill that in. Now, again, a bit of magic. We also know in fixed assets that three movements can take place. Additions at cost price, disposals at carrying value, depreciation for the year. Okay, so those three things can happen. Number one, I know that 74,000 rands worth of disposals took place. How do I know that? It says it right here in the note. Have a look at your information. A vehicle was sold at book value. The cost price, 226,000. Accumulated depreciation, 152. If I take the cost price and I minus the accumulated depreciation, I will get to 74,000. So I can write that into my cash flow statement. Disposal of non-current asset, that was a positive cash flow. The money came in. I sold an asset and I managed to get 74,000 for it. I also know that the depreciation for the year is 348,000. That was also given to me in the information on the additional information sheet. Depreciation for the year, 348,000. So grade 12, I'm again sitting with a situation where I have this, I have the end of the year, I know the figures for two of the movements. I know the figures for two of the movements, and now I just need to determine the additions at cost price, because that would have been money that I spent on assets. How do I get that? Well, I'm just make a simple linear equation and I get to 1,442,000. And that was a cash outflow. So I need to add that into my cash flow statement. The purchase of non-current assets, 1,442,000. Then a change in financial assets. If you look at your balance sheet again, you will see that at the beginning of the year, the financial asset, the fixed deposit, was 228,000. At the end of the year, 588,000. So I can show that there was a change in financial assets. At the beginning of the year, I had 228,000. At the end of the year, I have, and you're going to get to a negative amount now, which is perfect because it's going to show that you had a cash outflow for cash that you've invested in a fixed deposit. If you add those three, you'll see that the business went and invested 1.728 million in either fixed deposits or fixed assets. Okay, remember we looked at the purchase of a non-current asset and we got that by looking at the totals provided to us in the note. We looked at the disposal of the non-current asset and then we looked at the change in financial assets. Okay, so Derby Limited, from their normal operations, 1.204 million. Then invested 1.7 million. Now they're actually down by about 500,000. So how did they make up that difference? How did they make up that difference? Well, they had financing activities. And they could do three things there. Number one, look at your information. Details of share capital. The authorized share capital comprised of 3 million shares. On the 1st of January, there were 360,000 ordinary shares in issue. On this same day, the directors decided to repurchase 36,000 ordinary shares from a disgruntled shareholder at a price of 500 cents. Grade 12, that is cash outflow. So at the repurchase of shares, we're going to show that the directors took 36,000 shares back or bought it back at a price of 500 cents. Remember to put in the 500 cents and then divide by 100 to get it to a rand figure. I so often see learners making this mistake and then they get to a figure which is completely out of line. So the directors have repurchase shares, and cash had to flow out of the business for that. Then they also had a repayment. Let's go look at the proceeds of the shares issued first. If you look at your information again, on the 31st of December, that's the last day of the financial year, lovely cash injection there, the company issued 150,000 new shares at a price of 840 cents. That means 150,000 times 840 cents came in, and that gives me 1.260 000. So they had a lovely cash injection there from the proceeds of shares issued. And then finally, what they also did was they repaid their loan. Now remember our calculation that we had earlier on with the loan. If I just talk you through that again, remember we said that they've made payments of 328,320, but that was for interest and for capital. Okay, so if our total of payments was 328,320, and we have already accounted for 172,320 of that in terms of the interest, then the capital portion that was repaid was 156,000. This was the loan or the capital portion. Okay. And that is the last entry, is the repayment of the loan, 156,000. And you add all of that up to the block at the top. That's 924,000 that came from cash effects from financing activities. Okay. What happened in the bank account of Derby Limited? First of all, in their normal operations, 1.2 million positive cash flow. And then they had to invest quite a bit in fixed assets as well as financial assets. Outflow of 172,800. And in the end, they financed it by issuing more shares. Yes, they had to repay a loan, and they bought back a few shares. And now, you ready for the magic? If you take this and you add that, obviously the minus figure, and you add that, then you're going to get to the net change of 400,800. So if I just show you the final cash flow statement on the screen, you will see that all of this adds up from the top to the bottom, but if you take the cash at the beginning of the year, cash at the end of the year, you'll also get a net effect of 400,000. And after doing all of that analysis, you found out that you can actually explain to the shareholders where it was that the cash went. Why is it that little cash tank went from 88,800 to 489,600. Grade 12, on a good day, this is a lot to understand. So I want you to go this afternoon and go back to your activity book and rethink everything I've said. Speak to your friends, and then also you'll see that there's a lovely activity 4, which is from Hillside Limited, and maybe you can go and look at that again. And remember, the magic or the key to success with cash flow statements is to know where to find the information and to show all your workings. I hope you enjoyed the magic. I wish you all the best, and thank you for all your hard work and for tuning in this afternoon. Goodbye.